Your thinking on the rupee, first of all, before we get into the nitty-gritty here, Neeraj.
Hi, good morning to all of you. Thanks for having me on the show. Yes, we do expect that rupee's depreciation path will continue into 2024 as well. The key reason for us is that we are looking at a substantially wider CAD for FY24 as well, though there will be some consolidation, but we still will have a reasonably high current account deficit. We haven't yet seen a meaningful reversal of capital outflows that we saw for the best part of 2023. I think equity flows continue to be weak. That setup kind of augurs some sort of depreciation for rupee to continue, even though we do think that dollar index will be a bit weak going into 2024, and maybe Chinese yuan will also be strong. So those are the things that would help rupee. But given the fundamental factors, our anticipation is that about 2 to 3% depreciation in rupee is quite likely during 2024. It's not going to be a runaway depreciation, but it is going to be a very mild, sort of managed and controlled depreciation.
Well, Neeraj, two things here which could accelerate that. We've seen China reopening, and that story perhaps will again introduce more FDI that we've seen actually go to India last year. We've seen investment flows going there, people parking their money in India, and that's helped the rupee. It hasn't helped it much, but we've also seen the possibility of this reopen, meaning that money comes out in large part, and also what happens if the RBI wants to build up its reserves. It could accelerate depreciation for the currency, certainly.
Yes, I do think that two things. One is that Reserve Bank has actually used up a fairly large amount of reserves through the last year to manage the pace of depreciation. That could continue. So therefore, if there is any flow back of liquidity into domestic market, I think that will be used to build up those reserves. Secondly, I think China opening, it's kind of bit positive, bit negative. Positive from the point of view that if Chinese yuan indeed strengthens against US dollar, that is good for in general Asian currencies, and I think rupee would benefit from that as well. But on the other hand, if that opening means that we see some more equity outflows, in fact 2023 we saw a very significant amount of equity capital outflows from India. And if that trend continues, then obviously that adds to the depreciation bias as well. So I think it's a bit of a balancing story here on China opening. As far as buildup of reserves is concerned, I think it depends upon whether the capital flows continue or not.
Neeraj, for investors, it's about terminal rate. What do you think the RBI's terminal rate is? And is it fair to assume that, we'll see one more rate hike in February?
So our expectation is that we are very, very close to the terminal rate. We are expecting about 25 to 50 basis point further hikes. I think 25 is more likely than 50. So we are penciling in a 25 basis point rate hike in February. I think the subsequent meeting in April is a bit of a toss-up. There is some probability that Reserve Bank could go for one more after February, but it's still very data dependent. So yes, our terminal rate expectation is somewhere between 6.25 to 6.5 on the repo rate.